Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact to leaders that are doing and not only chatting. Now let me introduce my guest today.
Good afternoon from our studio in Amsterdam. I'm thrilled to have a very old friend, not old as in ages that he's been around, but someone I've known for a while. So for those of you who haven't joined before and don't understand how the system works, just move your mouse over the name of the person if you want to send a private message, and if you want to make a comment or ask a question or grab the mic, just press grab the mic and you can join the panel. Or just post a question, and if there's enough people at the end, we'll do a short mixer. So today we have Benjamin Bingham, which I had no idea that he comes from such a well-known family. I only discovered this, recently. I just always liked him as a very dedicated guy, and I knew him when he was actually working for this Maryland asset manager, and then he left and focused on sustainability. So I'm going to let Ben introduce himself for those of you who don't know who Ben Bingham is and Three Sisters or haven't read his book. So Ben, tell us a bit of your journey, which kind of brought you to your here, and some of the prestigious people in your family, which I also didn't understand or know. Thanks for doing this.
Well, thank you, Robert. I'm going to take the headset off while I'm talking. It's helpful when I'm listening to others or questions that come. I hope there will be questions after I speak. So I'm going to start with a shameless self-promotion. I wrote a book called Making Money Matter, Impact Investing to Change the World in 2015. And Julie Davids, who is the head of Purposeful investing at BNP Paribas Bank of the West, when she introduced me once, she said, "This is the Bible of impact investing." I was also once introduced as the Moses of impact investing by the notorious guy who started Opportunity Collaboration. So the truth of the matter is that I have been doing socially conscious investing really since the 80s. My first thing was a social venture, which my wife and I were involved in for a number of years, called Triform, and it's now called Triform Campville Community. It's an agricultural community that I raised the money for when I was in my 20s. And we had 80 acres and working with people with special needs that were borderline, who wanted academics as well as social experience, and that's grown phenomenally. It's now about 400 acres, and the Rockefeller farming part of the Rockefeller family has donated land to it, etc. So that was my first thing. And then in the 90s, I was involved with the Investor Circle, which is a well-known early stage venture group of investors around the United States. And my brother was one of the first members of that, and gave me the directory in 1993. So I began to meet those other early thinkers in the private space. The mutual funds, et cetera, were already going. So at the end of the 90s, I'll just give you a quick survey of what happened. I decided after a sabbatical kind of year from working with two ventures intensively, one was in biological healthcare and one was in workflow technology. I got involved in ritual in Peru, and the reason is that my grandfather discovered Machu Picchu. So I started taking people during that year. I went there about 8 times, and I got really interested in ritual. I was turned 50 in 2000, and I wondered, what am I going to do for the rest of my life? And I actually considered becoming part of the movement for religious renewal. Went to an esoteric training in seminary in Stuttgart, Germany. And it's there that I got the idea that maybe the universal ritual was money. And if I really wanted to make a difference, we could change the way we think about money in the world and change all the assumptions that we have and really think of money as an expression of our highest intention. Anyway, through circumstance and chance to some extent, I met someone from Lake Mason and I decided that, that the people I knew that were doing good things with their money were only using about 5% of it for good stuff, either philanthropy or venture. And that bothered me. It was the model that the foundation world had used for years. And I just felt like, what about the other 95% of your money? So I decided to join Lake Mason and see if I could figure out how to create portfolios that were 100% aligned with people's values. Well, it was hard to do within that circumstance, limited to public companies, limited to the mutual funds that were accepted by Lake Mason, et cetera. There were all kinds of limitations, and certainly it was tough to do private investing in that space. So when Citigroup took over Lake Mason in 2006, and I started seeing what they were doing with manipulating interest rates and of my clients, that I had built up a book of friends and family, basically. And they were basically, coaxing us in, I didn't do it, but getting all of our clients to sign paperwork for bogus mortgages. It was time to get out. So in 2007, those clients who wanted to come with me left Lake Mason, and we started doing impact investing, private and public. In 2007, my first fund was called High Impact. Didn't know that word was going to become used universally, and nobody particularly, it doesn't matter if it came first from me or from Rockefeller, but I have used that word because it makes sense. We're thinking about what's the impact of our investments. So since 2007, I've done both public and private. In 2011, I started my own RIA called Three Sisters Sustainable Management. And we just put out a 10-year anniversary report. And on the chat here, you can see the website, Scarab Funds, LLC. Just check out the 10-year report, and you'll get much more detail about what we've been doing. Yeah, but why did I do this? The question may come, and I'd love to just give you a little bit of a background on my family and where I'm coming from. Not too much, but just it was an interesting configuration. My great grandfather was Charles Tiffany, and so his granddaughter was my grandmother, and my father benefited from that. I grew up on a large farm in Connecticut, probably at one time the largest farm in Connecticut. So we were very privileged. I went to Groton School in Yale. And my grandmother's husband was Hiram Bingham, my grandfather who discovered Machu Picchu. But the missionary side of me, the side of me that was looking for meaning in my life, I think may stem a little bit from the fact that my ancestors, many of them were missionaries. The first Thanksgiving actually was, if it happened, it was Elder Brewster was related to both my parents. He was the spiritual leader on the Mayflower, and from what I've heard from both indigenous people and from other descendants of that time, actually they did have 50 years of peace in that community. So, we are in a tendency of thinking historically of black and white, and there was a lot of terrible stuff that went on in that time. But apparently that community was good. So his descendant was the first Hiram Bingham, who was the first missionary to Hawaii. So it's in my blood. My father was also a kind of missionary oriented in a different sense. He was a spiritually oriented person who got involved in the 30s with the work of Rudolf Steiner, and got as a diplomat in London, got very interested in what I think is extremely important, the threefold social order way of thinking, which is very much part of how I think about money and investing. He's now well known for his constructive dissent in France. He worked with the French resistance. Contrary to the U.S. position, at the time, he issued thousands of visas to families escaping from France instead of going to the concentration camps. And he also hid in his own house and helps personally many famous people working with Eleanor Roosevelt. So Marc Chagall stayed in his house and hid his paintings there, and then escaped from there. And they were lifelong friends. So all of that inspired me. So when I was at Yale University, and I was a anti-war person probably from childhood, I decided to take a leave of absence so that my very high lottery number would come up, and I would not be drafted, and then I'd be free from the concern. I had prepared to be a conscientious objector to the war. And in that time, I went to find out more about my father's worldview. I went to Emerson College, and there I fell in love with biodynamic agriculture. And I did a 2-year training there, and actually farmed at Tri-Farm and also on our farm in Connecticut for 10 years. And I've been growing my own food biodynamically for 50 years. So all of those things play into the way of thinking. Agriculture is a good model for managing a portfolio of resources. I mean, you just think of companion planting, or hedging around a field to reduce the volatility and the winds of a field that changes the ecosystem. You might think of rebalancing as the rotation of crops, or diversification instead of monoculture is diversification in portfolio management. So all of these ideas, even double digging, can be related to thinking about due diligence. All of these played into my thinking, and now I've got a group of funds called Scarab Funds, which it's in the form of a series LLC, which means one private placement memorandum covers all the different strategies that we do, which range from a short duration kind of microfinance private debt, and intermediate term private debt, which is more like venture debt, because many of the ventures that we have supported over the years, we've founded a number, are very early stage. And so there's always a chance that they'll be converted to equity, which has happened in a number of cases. And then we have our hedge fund, which is a public equity ESG fund, which is also linked with CSR Hub, which we were founders of. I'm on the board of CSR Hub. If you don't know it, it's the largest aggregator of ESG information. So you can compare in your public portfolios how the companies you're invested in compare with their peers. And then we do private equity and real assets. So really, my idea originally was to create a 100% portfolio that was a beautiful way of having a meaningful relationship with your money. And we're welcoming new LPs into Scarab Funds. We're also welcoming co-investors on a larger scale who want to place money with our existing portfolio or new companies that we can find together to invest in. I have a great team. Our hedge fund is run by a man, Dan Martell, who had his own trading company for decades on Wall Street, and he was also a member of the Chicago Board of Trade. He's a brilliant investor, and since we added, it took him a while to persuade me to do hedging because it has a negative connotation, and I didn't know if socially conscious people would like it. But because of this agricultural image that I gave you already, it really made sense to use options along with stocks to reduce the volatility in the portfolio. And it's been actually very advantageous since we started using options in 2019. The portfolio has doubled in value with very little volatility. So we really want to grow that portfolio into the hundreds of millions or more. Dan's very comfortable with big numbers. He was an institutional investor at, with banks, and actually ran a division of BNP Paribas for a while. So we have that capacity. I have a wonderful CFO, Angelina Bellocchio, who's been with me for the whole of the experience since 2012, and really very advanced thinker and smart, detailed person, because I'm more of a big picture thinker. So she's really managed the business and helped in the investing in the private side. And Sandeep Goel has joined the board recently. He's a serial entrepreneur who sold his first company when he was in his early years, in the late 20s, for $40 million to WebMD, and has been doing permaculture and also impact investing and different kinds of technological investing, and has been bringing some wonderful companies to our attention. And we just recently, if you look on the media page of Scarab Funds LLC, you'll see that Ernest Gonzalez has recently joined as a partner. So we're ready to scale and really excited about it. I hope that gives you, a little bit of a background for a conversation. I look forward to being challenged in whatever way you want, Robert, or anyone on the call. I'm going to put my headset so I make sure I hear you. Robert, are you there? So I'm not sure what's happening. Robert, you're welcome to speak. And if there's anyone who wants to ask a question, I don't know if with Robert not showing up at this point, if you can unmute yourself, but that might be a way to continue without Robert. There's Robert.
Okay, can you hear me now? Okay. Can everyone hear me? And yeah, okay, good. Okay, can you hear me now, Ben?
Yes, I'm sorry. I don't know what happened.
No, that's okay. No problem. I had a couple of questions. I mean, so you gave a good plug for your company, which normally we don't really do. But so now I'm going to ask you the difficult question. What has been your biggest failure with Three Sisters? What has been your biggest disappointment? Because I hear from many investors who go into the ESG and impact space, and they're all incredibly disappointed that all the ones that were talking a lot about, I want to do this, I want to do that, and in the end, they find it very difficult to get investors to put up money because they talk a lot, but they don't really do anything. Have you experienced that? Because you're still quite small, even though you have this network of prominent family. So what has been for you the biggest disappointment of the sustainable investment space?
Well, it's well known that fear and greed run the market, right? So people are fearful of doing anything unusual. And, people can be really big on doing something socially responsible with some of their money, but the greed aspect makes them think that they have to do something, that they don't really want to know about to make a lot of money. And so that's a big disappointment. I think, I think in terms of a big failure, I think early in my, trying to learn about private investing after being at Legg Mason for 7 years and Citigroup, I wasn't clear enough in myself about the fact that now I know that when somebody says it's a 10-year investment, it's probably a 12-year investment. Things take a long time, and people get uncomfortable with that long period of waiting, and so it's not really a failure because those companies, there are a number of our companies that we still believe will be very successful, but we don't have a lot of exits yet. So even though I've been doing this for 10 years, and so you could call that a failure, or you could call it, I didn't exit early from companies that needed a lot of handholding. And I've put most of my energy into supporting the companies we've invested in rather than marketing, because I felt like I either needed some other big names as partners, or that had track records that were, brilliant, or, I had to have some great exits. So what's sitting in our evergreen funds, these are evergreen because new people can add their investments in, are some, little giants, little gems that I think we even have unicorns in there. A couple of them that I think are very likely to be unicorns. One of them is Polymateria, and it's probably going to go public in a couple of years, if not sooner. And the other is Illumibu, which is you can look it up. It's a wonderful company that has biological detectors for that can trace symptoms in 30 different ways, and they just acquired a cardiogram. This is on our website if you want to read up on it. Cardiogram is the first one to really give early warning signs for heart attacks. So these are companies that have the scope and the market potential to become very large. But they're still sitting in our portfolio, and it's not something we can, it's not there yet.
How much of your assets are committed to private equity as compared to public equity from Three Sisters?
About 3/4.
3/4 is in private equity.
Yeah, private debt. So that's what I've been spending most of my time on, hand-holding, trying to figure out when a company is not going to be able to pay back their debt. Then we have taken over, and we've merged companies that had great people in them. One of my favorite stories right now is I'm chairman of Infinite Workflow, which is basically a compilation of 3 different companies that we had invested in. And now we have the patents from one company and the inventor. We have the CTO of another company, and we have the relationship with MDC, which is a 50-year-old nonprofit that had been remarkable in marketing one of the companies was basically helping people that were outside the federal benefit system, didn't know how to collect on food stamps or anything like that. We made it easy for them to fill out one form with a technology that would then populate all the other forms, so that we actually raised for people who were outside the system over a number of years, over $2 billion of federal money. And that MDC, who helped us get that into Ohio, North Carolina, South Carolina, and a number of other places, was such a wonderful partner. And so when another company failed that had a technology that was better than what we were doing, he agreed. The guy I'd been working with there agreed to let's create a new company, and the purpose is to do what MDC does, which is integrate social services through an online service that really empowers individuals who are outside the system, who are homeless, who don't have jobs, whatever, who need help. They can find, what are the companies in social services in a given region that are working together, and how can we coordinate a success pattern that you can drive yourself as an individual. So it's empowering also for the social services to know of each other.
You were one of the early investors in AHP, American Homeowners Protection. For those of you who don't know it, I really liked, he spoke once at TBLI. I was just very impressed with the whole idea where, Blackstone and everybody were just hoovering up all of these crappy mortgages that no one could pay, just to, flip the company, kick the people out, charge high rents, and make money back quickly. They did the opposite. They said, no, we're going to keep the people in there. Let's renegotiate and not kick them out on the street. So you were an early investor
we were the first institutional investors. So we put in enough money to help them get started, and so I'm very proud of that, because George Newberry, wonderful guy. He's written a couple of
Jorge.
Well, no, he goes by George.
Oh, he goes by George. Okay.
Yeah, it's spelled like Jorge, but his family's originally from Argentina, but he grew up here and he calls himself George. He had this innovative idea, which is really one of the things that I'm always looking for, is innovation that's really going to change the paradigm. And his idea was to buy up bundles of mortgages, of houses under $100,000 worth of mortgages that wasn't worthwhile for the banks to go into foreclosure.
Sure.
And then just negotiate with the family, what can they pay? Because he would get them for, less than 50 cents on the dollar, sometimes for nothing. And so he had a huge margin to work with, and he could work it out with them, what they could afford. So he now owns, I'm sure, well over 3,000 homes where families have been able to stay. Yeah, and the other thing that he did, which I love and innovated and democratizing, is that he was one of the first to get granted. I think he was the 17th firm to get granted from the SEC the right to do crowdfunding. So online with non-accredited investors. So non-accredited investors can go there. I send everybody that I know, maybe I shouldn't say this as an advisor. I don't take this as advice, but if you're not accredited, it's a place you can put 10% of your liquid assets, if you have any, into that fund, and it started out at 12%. So when we first invested, it was at 12% for 5 years deal. So and now it's, I think, 7%. So it's been gradually going down. So that's AHP, and another one like that I'll just mention because I love what they're doing, and we've been investing in a number of their, cherry picking from their deals, is called Small Change. So they're also friends with George, and I met them, when we were all on a panel together. And Small Change is another place where non-accredited investors can invest in really cool, socially conscious real estate deals with small amounts of money.
And what is your, because you said 3/4, it's unusual, 3/4 of your investment is in private equity. Mm-hmm. I always had the impression it was mainly liquid assets. So what is your ticket size? Do you only do like seed or early stage or super startups?
Well, it's like diversification. We do everything. And that's, I guess you could say, the failure is that we didn't grow enough. And I think the success in the future is going to be because we will grow. I think we're on the edge of growing dramatically because we have a model that would work on a large scale. But I don't, ticket size depends on, the general asset management idea that you don't put more than 5 or 10% into any one thing in a portfolio. So it depends how much money you have in that portfolio, how big the ticket size is. We're not afraid of large ticket sizes, and especially in co-investments. And I think with new partners, we would be very happy to do very large ticket sizes with game-changing ideas that make sense. But you have to do it in a way that's managing the risk.
What is your average ticket size now to invest in a private equity opportunity?
Well, around 300,000 to 2 million.
Okay.
Yeah.
But you're now that you're best buds with Eno, who wanted to buy your family's company. I guess you're not involved in Tiffany anymore. But LVMH, I don't know if they did it, but they wanted to buy Tiffany. Now you can just call up Eno and says, "Hey, how about parking some of your billions with Three Sisters?"
Yeah, I mean, a lot of talk, there's been a lot of talk. I have institutional investors that, and the refrain that I keep hearing is, when you're 100 million under management, come back to us. We love what you're doing. And we're not there yet. We're getting close with some of the potential investments that will be coming our way in the next year. It's always embarrassing, really, that I've been doing this so long, and it's, we've had, our clients get older, they need their money. So it's been like a sandhill. As I've grown, gotten new investments in, I've had people that need their money out. And so, it's always been in the, 20 to 40 million range, up to 70 million was the highest. So it's been in that range for a long time. And I just don't have the manpower myself to be really doing a lot of marketing. But, that can change. And with the right partners, and I hope some people on the call will know somebody, if you aren't interested yourself, who really wants to do serious, impact investing. That's, we have a lot of experience. We have a lot of failures, when you talk about failures, and you learn from them. So I think, one of the reasons I have someone right now who's thinking of putting a large amount of money in is because we have so many things that are close to exits, that are, so it makes more sense to put money into our companies that are mature and have gone through hard times and are now, getting closer to exits. Because with a evergreen model, new investors will benefit from that.
Right. I'm going to start taking a couple of questions. Beata wanted to know, Ben, if you didn't have the fortune and we're going to start your journey now, what would you do and how would you start?
Well, I can say I didn't have my fortune when I started. So I'm fifth generation. My father was of the old school. He believed that, he took his wealth and invested it in raising 11 children. I was the 10th of 11. And he was more interested in philosophy and spirituality than he was in making money. So he basically used up his inheritance during his lifetime. We all got scholarships because, the Groton, wanted Bingham's there. And, he had some big failures, and they weren't necessarily his fault. I can tell you offline sometime, pretty interesting stories of things that didn't work out for him. So, I wouldn't have done anything different. I had to learn the ropes, learned wealth management, and became a certified financial planner. That was all to understand how the system worked. That was what I did first. And I used socially responsible mutual funds and so forth in the beginning. And then really moved into, the exploring the whole public equity space was the next step for me, which is, there's like 80,000 or more public companies, and who's got a universe of more than 2,000 that they're looking at? It's just, there's so many public companies that nobody knows about that are actually really cool. So I used a technology to search the internet for cool companies in the beginning, and I worked with Paul Hawkins' research group, and we shared information with each other initially. And I found some really, really neat companies that way. And that was one of the reasons I wanted to leave Citigroup, was because I could not invest in companies that were not recommended by Wall Street.
Yeah.
And it was very limiting.
Mm. So. Beata had another question. Ben, you need to be very fast in evaluating people you can or cannot work with, investors you can or cannot work with. What is your litmus test? What is your bullshit barometer? How do you filter apart from greed, lack of integrity, or dishonesty?
Yeah, I think that I'm if you could say, if I wanted to change anything about myself, I tend to be very positive about people and naive in a sense. I believe people. But I would be looking for generosity of spirit in people that I would want to work with, and that's what I do look for, and that's who I have around me now. Integrity and generosity are the two main things, and transparency. So, I think transparency and collaboration are the heart of business, or should be the heart of business going forward. And it's a whole new world if you think of fraternity, from the French Revolution, only really being the ideal for business. I think of reciprocity as another good word for business and for the whole world of commerce. So I hope it's always hard to tell, whether somebody's selling or whether they're really who they are.
Yeah, that's very, very true. Arthur wanted to know, how do you deal with investors who look at impact investment as a fad?
Well, there's no harm in getting into the fad. If they believe it. I do believe that it is a fad, but I do believe it's a fad that's based on, sorry, I just had something pop up on my screen. I believe it's a trend that's it's a reaction to how bad things have been for so long. And I actually think of the public equity part of our portfolio as something that should expand dramatically. And what I'd like to see is that the ESG world puts less emphasis on proxy voting, which is fine. I don't have a problem with it if you want to do that, if you're an activist and you like to try to, change the minds of people in a corporation that's doing stuff that you don't like. That's a hard job, and some people are doing it very well. But I think more and more of people's portfolios should be investing in companies because they're good, not because they're bad. I was blown away at an SRI in the Rockies meeting when someone from the podium said, "You should be ashamed if you don't own Exxon." I was like, what? I'm in the wrong room or something. But, I understand what they're doing. It's very interesting that they're infiltrating these companies and trying to turn them around. But I think it's a cultural trend. I think a lot of the people in those companies want to do the right thing. The companies themselves are set up to be only profitable. And that's the underlying problem of our time, is that fiduciary responsibility means, by definition, by law in some cases, that you have to put profit above everything else. And it's stupid because really it's self-defeating. You're destroying resources on the planet to become profitable, which in the end won't really work. So I think the trend is there. I think the public equities themselves could be a barometer for human values. And that's why we do public equities at all. Otherwise, it's kind of, it's a little bit indirect in terms of impact. It is indirect. You're saying what you think the value of a company is. And that's not really helping them directly, except the higher their value is, the more they can borrow for expansion. So that's the indirect benefit. But the other benefit is if the bad companies see that they're being devalued by ESG investors because they're doing bad things, and the good companies are being valued more because they're doing good things, then that will have a huge impact. And I think it is already. Sorry, it's a long answer, but a lot of people are saying that last year was a green bubble. Because a lot of people investing in cool green things did very well. We were among them. We were up 38% last year, based on, our public equity hedge fund. We did have a lot of really cool things last year. Now we're kind of back to, more plain vanilla type of investing. So we're opportunistic. We say if there's a trend, we will jump on that trend. And we will, if things get overvalued, even if they're good companies, we will cut back. So we're not just, we think it's a little bit naive to think that you should just own a portfolio of good companies and stick with it forever. It's much more appropriate, I think, to go with the changes in valuation and see yourselves as part of the barometer and really make sure that good companies are valued properly. That's what we do.
Do you give any talks to young people at business schools?
I do, yeah. I've spoken at Bard's Sustainable MBA program and others. I was invited by BNP Paribas to speak to 40 ultra high net worth millennials out in Silicon Valley, and they were partying most of the time, and I'm not sure they remember anything I said, but I actually have stayed friends with some of them. And yeah, I love talking to the next generation. There's some great people that are turning to us as sponsors for things that they want to do, and we're developing things like eco resorts that some of the very wealthy millennials want to work with indigenous people and in sacred areas to make sure that the ecotourism doesn't ruin the area and really promotes the wisdom of the indigenous people. Some of the young people that I'm working with are wanting to do that. I have other contacts that are, trying to create micro cities with really cool, smart cities. My son is even involved in designing a skate. He's a well-known skateboarder with a skate shop in Austin, Texas called No Comply. And he's involved with, I introduced him to the micro city impulse, which would incorporate skateboarding into the design of urban cities that are sustainable. Anyway, yeah, I like that.
I want to try something new. I'm going to jump into a virtual mixer to keep you people on your toes. You don't have to do anything. You just have to say hello.